very beginning of the last leg up in the precious metals, and it's going to be a doozy. It's also going to shake a lot of people off their back because they're going to get this $100 move in silver, or excuse me, $100 move in gold, and that $10 move in silver, and they're going to trade in and out and think they're the smartest person in the world. I'm very happy. They made a nice big fat profit, only to watch the market march away from them. I think that's going to happen to a lot of people.
Ladies and gentlemen, welcome to this special interview. Today we have a returning guest to the show, David Morgan from themorganreport.com. That's themorganreport.com, which offers subscription. If you are a new silver or gold investor, I would recommend that being your starting point. David has written some of the authoritative books on silver investing, including the Silver Manifesto, as well as Second Chance. David, we'd like to welcome you back to Silver Doctors today.
Thank you very much for having me. It's good to be here.
Now, David, when you were on a few months back, you said get ready for $1,400 gold. And, at that time, morale was terrible because we kept getting, losing a hold of, call it 1350 to 1365. Nobody ever thought we would break through that multi-year resistance. But here we are, and we're sitting, above 1425 today. What are your thoughts on the gold market right now? And what is your outlook as we move into the second half of 2019, David?
Okay, well, we had a 6-year overhead resistance around 1350 basis the US dollar, the continuous contract. And if we looked at gold in other currencies, it was actually doing quite well. If you're looking at gold in terms of the Canadian dollar, the Australian dollar, you're pretty happy holding gold. But in the US terms, you weren't. Anyway, we broke through that. I said 1400. I'm thinking conservatively, 1450 by the end of the year, maybe 1500. I don't know. What I do know is that we've reached that level after 6 years, and it looks like it's going to hold. Short term, I hate to give real short-term calls, but I do it, for my paid members. I won't say all the time, but as required. And we need to build a new base, and no one knows where that is. Is that, 1420 or 1400 or 1380 or 1450? I'm inclined to think it's around the 1400 level. And I think, it may take some time. Basically, once you break through a barrier like that, or an upside resistance, as it's called in the commodity language, it takes a while to consolidate and regroup. Now, if you look at the commitment of traders, the open interest is huge in gold, and the commercials have been shorting through this whole rally. And normally they don't lose. So at some point, I expect to see some kind of sell-off, whether it's going to be, what we've seen several times in the past, where it's a huge sell-off and, multiples of 10, 20, 10, 20, 30, 40, dollars down from here. I don't know. More likely than not, it will be significant enough to scare people. And I'm going to digress, but this is probably one of the most important digressions I've done for everybody's benefit. We're back in a bull market. I'm convinced of that. We might test the breakout level. I don't think we're going to get below 1380, 1370, but time will tell. The most important thing I could say is this. A bull market has restarted, and the function of a bull is to shake off as many people as possible all the way up. So the best way for most people to invest in this market is to invest. Don't trade, don't speculate. Now, I do both. I teach both. My paid people see my trades, and I trade around these big swings because the volatility is so juicy. I mean, I made 30% in my trading account within like a month. Now, I don't want to give that all back. But I also have 70%, 75% that I don't touch, right? So I'm only swing trading with 25% at the most. And it's beneficial. It's nice to win. But all you have to do is get it right 12 times in a row and miss that 13th. If you're trading a whole portfolio and watch this thing go from, make up a number, $3,000 gold to $5,000 gold, and you miss that move, are you nuts? So the digression again is, it's a bull market. Stay on the bull. The best way is just to buy and hold and weather all the ups and downs. Or, if you're inclined and you have, fairly higher net worth and you can handle the risk, and you can follow me or someone like me and go ahead and swing trade around it. But I think that's the most important thing I could say. So I think I covered all your questions. It's kind of a 3-for-1 in there. Where were we? Why did we get there? And where are we going from here?
Yes, it sounds like, a lot of people talk about gold as an insurance policy and as a hedge against uncertainty. But in addition to that, with the start of a new bull market, it sounds like you're telling me that there's also some very exciting opportunities on the investment front to look at it as capital gains for the investments. So it sounds like we're on some, the start of a multi-year, what some people have even called a commodity super cycle. So I guess my follow-up question to that would be, do you think that the hedge funds and the speculators and those individuals, possibly some of the black box algorithmic trading, do you think that they're flipping to a buy the dip mode now as opposed to sell the rallies, as has been the case for the last several years?
Yeah, and a lot of those are based on just the algo themselves that self-adjust, believe it or not. They always take data that's the most recent and weight it more heavily, which is true. I mean, it's more important what silver did the last 3 trading sessions than that it hit 50 in 1980. That's something that would be weighted very, very small. So yes, but we still have the commercials that I outlined before. So the hedge funds have definitely gone on the silver side of the equation, which means that they saw this opportunity with about the 93, 94, 95 to 1 ratio, and it was just too juicy to pass up. And then you had somebody of clout and importance and significance come into the market named Eric Sprott and bought, I think, 10 million worth in his own personal account. And the market's starting to move. So you had some follow on and some follow through on that. Silver's finally starting to, what I would say, confirm gold's move. I said to everybody for months, gold had to lead, gold would lead, silver would follow. Everything's acting the way I stated, and you can check my previous interviews or not, but you can take my word for it or not. So we are now, I think, consolidating. I don't see a lot more upside unless, and this is important to know, since we're in a bull market, we're much more likely to react to the positive or the upside in gold than we were in a neutral or negative market, which means in the past, if there's something that goes on in the Strait of Hormuz, the market would take a big yawn and all the gold bugs would say, my goodness, look at this, really increase in tensions and, possible start of a war. I mean, why isn't gold reacting? Well, it's not reacting because they're in a bear mode. Now we're in a bull mode, so it will react. So barring that, in other words, if there's something that, I can't see the future, takes place on, let's call it the war front or the war tension front, you could see a big pop into gold, literally, then, there, and overnight, and maybe, as an extreme, go up limit for 2 days in a row. I'm not anticipating that, by the way. What I'm trying to suggest is that we're in a bull market. We'll react to the news of the positive side, and without that taking place, I think we're going to level out here for a while, probably digest these gains. August is usually the worst month for gold investors. We're coming into that now. We saw in 2016, and I know that's a question because you outlined the questions coming up that we'll get to in a moment or two. But barring 2016, it's a really high probability, I forget the number, but somewhere in the 80 percentile range where August is like a low for the metals. And we're moving into that. So I really think all things thought about that we are going to see a bit of a backing and filling in this market. Doesn't mean the bull's over by a long shot. We just need to, and I like the word, digest these gains.
Okay, and speaking of which, but it also sounds like that there could be some, that it also sounds like there could be some catching up by silver if gold is going to consolidate here. Is that what your outlook is for silver? And I guess the question on everybody's mind is, has the gold to silver ratio finally topped?
Well, the gold silver ratio, I think, is finally topped, but it's such a small market, and these traders in the silver market now are, more short-term oriented than ever before. So I think if gold starts to consolidate, and let's say works its way down from the 1420 level where we're doing this discussion to the 1400 level, which is $20 on 1400. I mean, it's almost meaningless, but it's still $20. I think you'll see silver probably overreact to the downside, but I don't expect to see the ratio at 95 to 1 again. I do think that silver has a lot more work to do, it's just not caught the fancy. I mean, the most important thing, second most important thing I can say besides the bull market trying to shake you off is this. And I don't like, well, this isn't my preference, I'll put it that way. But this market, and I want this to go into the ears of people who understand or sophisticated investors. Now, the general public is probably going to go over their head, and sorry if I sound, a bit uppy. I don't mean to, but also the truth sometimes can be heard and not understood. This market has when for all practical purposes, 100% driven by paper. Let that sink in for a moment. So we haven't seen any physical gold buying. We haven't really seen any physical silver buying outside of Eric Sprott that I just mentioned. And so this whole thing has been based on derivatives, or what I call the paper paradigm, which means it's very, very vulnerable to either way. More upside possibly, probably not much, and a lot of significant downside, I'd say, based on the open interest. So we got to be careful here. Now, I talk to people across the industry at a pretty high level, as you can imagine. And so one of the hedge fund managers verified what I just said about it's all on paper. Secondly, I talked to some of the major wholesalers, I mean major wholesalers, and some of the major retailers. And the consensus so far is that many of the gold community are selling back physical gold into this rally because they think it's not for real. So that's kind of a good contrarian sign. I mean, it's a contrarian's contrarian. We're contrarians looking at gold as both, asset protection or insurance and capital gains in most cases that follow my work. And for those that don't, just an insurance policy alone, buy it, put it away, forget about it, sleep, but don't even worry about it. But that's the problem. So on the silver side, there hasn't been many sales back because $16 silver is absolutely, completely, so ridiculously cheap. Who would be, dumb enough to sell at that price, except for the paper pushers? So, but that's interesting. So I want people to know that is this rally for real? Yes. Is it backed, or let's say, is it strong as I want to see it be? And the answer is no. And the answer is why not, David? The answer is because I haven't seen enough physical follow through to make me happy. So I hope that's helpful to everybody. It should be, because even though the paper market controls the price, and it will until it doesn't, the physical manifestation of how many people are actually reaching their pocket and turning fiat into physical metal has basically gone, I won't say gone away, but substantially less than what it has been. And it hasn't caught up to this new price level yet.
Mm-hmm. And I'm thinking that a couple of things that we can be looking for as to help us understand if there is this move into physical would be things such as the U.S. Mint Silver Eagle sales, or or premium over spot price on 90% constitutional silver, things like that. Are there other things that you would be looking for as well? Possibly institutional or industrial use coming in and purchasing physical silver, or what other things?
Well, you said it, Paul. That's right. I mean, you look for, first of all, you look for the spreads to widen. They're pathetically small, as you know. Even the NUMI market has been hammered. I mean, there's just no markup on these markets at all. Excuse me. So that'd be like the first indicator. And then, of course, the institutional side will come in. I mean, we're going to see, I'm convinced we're, at the very beginning of the last leg up in the precious metals, and it's going to be a doozy. It's also going to shake a lot of people off their back because, they're going to get this, $100 move in silver, or $100 move in gold, and that $10 move in silver, and they're going to trade in and out and think they're the smartest person in the world. I'm very happy. They made a nice big fat profit, only to watch the market march away from them. I think that's going to happen to a lot of people. But it takes time, and we have to kind of be smart about this market and not get, we need to respond to this market and not react to this market. And I think that's like my main function writing the Morgan Report, is keep a level head. I've been here for more than 40 years. I've seen these markets. I've seen when, I got frustrated. I mean, remember, after the 80s peak, and, some significantly big news would happen on either on the financial sector or occasionally in the geopolitical side. I mean, major stuff, and gold just sit there. And it was so frustrating because to me, it should react. I mean, this is a big deal. And it was a big deal, but we were in a bear market. Anyway, back to you.
Thanks for those answers. One of the things that I'm looking at that I think is a good sign that this rally does have legs and that this bull is for real is that and over the past few years, it seems that everybody would be so far on one side of the boat as to, oh, gold's breaking out, this is it, or oh, gold's pulling back. But now there's just so much, half of the people are convinced that gold is about to plummet, half the people are convinced that the rally is going to continue. And I think that that would be very healthy in a bull market to see that kind of wall of worry, so to say. I don't know if that my logic is sounding right there, David.
No, I could comment on that, but I could comment on almost anything. No, I mean, there's lots, I don't look at a lot of the indicators in the technical world, and there's so many of them. But, I used to use candlesticks a lot. I don't anymore. The point is, you're in what you said, Paul, is very good because you're in kind of this balance now between bulls and bears fighting each other. If you're all, it's an extremely bearish market, it's easy to sell the market off and crash it. And when you're overbought or too many bulls, then obviously it goes the other way. But when you're kind of in the struggle, which we are doing right now, and it is balanced, you have a consolidation level, which is like we do keep talking about, is around the 1420 level. So until we get an adjustment in the commitment of traders where the trading funds get matched against the commercials and it washes out to a level of maybe 100,000, 150,000 less contracts that are open and see where that price level is, that will give us a lot better feel for not only how strong this market is, but what the next leg up will look like. And that hasn't occurred yet. But I do think in this next few weeks of trading, meaning in early August, probably we'll have a pretty good idea. Be interested to see what happens around options expiration as well. The banks don't lose often, and unfortunately, or whatever. But this is the way this market works, and you need to understand that if you're going to do well with it.
Now, a lot of people are comparing and contrasting this breakout in gold with what took place in 2016, and it kind of ties into the miners. And we do see that the miners are starting to move. Now, this question is going to be kind of broad. I'm not sure how I could get it more specific, but are you seeing sentiment and interest coming back in the mining sector? What are you looking at in the mining sector? What do you think current market conditions are? Are you comparing and contrasting with 2016? Could you talk to us about the mining and the resource sector for a minute, David?
Sure, I'll be happy to. And, I'd love to give you like the crystal ball answer so everyone could go home and be satisfied and know what's going to take place. So in 2016, we usually get a lift in January. It's a pretty easy seasonality. Almost all of my people that pay me know what to do. And of course, I tell them exactly and I show them exactly with my videos. So 2016 started off. I said, look, I think we've got a 3-month rally. But I'm, a disciple of Richard Russell, and Richard Russell, I think one of the best in the industry, deceased now, but, the market knows more than anyone, and we'll let the market decide for us in most cases, which I do. That's how I trade. And so here comes March. No, market says we're going higher. So basically, we went through a summer where the market went up. We caught that rally perfectly. We traded AG, which is this symbol for silver on the periodic table. It's also First Majestic on the New York Stock Exchange. And I don't remember the exact numbers, but it was something like we got in at 250 and out at 18. And I was just happy as could be. And I was right and I was wrong. I made a great trade. A lot of people made money. We had more, subscribers come back to us. And, but I thought, I really did, that was the beginning of the bull market again. And for, 9 months it was. And I expected a pullback. I expected a correction. I called the top. I said, look, it's going to consolidate. We got to digest these gains. That's the word digest again. And I thought it'd probably take into December. And it did. And then it kept going down. So, 2017, I thought we bounced back. After a while, it didn't happen. 2018, I thought it bounced back. It didn't happen. And here's 2019. And I'll go on talking. I, like most out there, are in that neutral mode. I'm half bullish, half bearish. Again, to be consistent, we've broken through that 6-year level, but we need to stay there. We need to test it. The big thing for me right now is, what I said earlier, which is, look, we've got to get through this 1350. It'll happen, and it has. Now what we got to do is see what the big test is. And I don't know what it is. Well, they know what it is in the commitment of traders, a huge sell-off in gold on paper, and see how the market reacts to it. And does it take gold down 10 bucks, 20 bucks, 30 bucks, or 40 bucks? That's what we need to know. And once we have that information, the data tells us that, and the market speaks. Yes, is the market manipulated? Yes, it is. But it doesn't mean that we're not in a bull market again. So once we have that data, I'll be a lot more comfortable. Now, let's say I'm wrong, and gold sells to below the 1350 level and stays there. If it just poked its head below there and popped right back up, it wouldn't concern me too much. But if it sold below that level and stayed there, especially the volume was huge, I mean, you meaning the market, let me state it that way, the market will have done a huge psychological damage to this whole community, this whole precious metals community. Again, I doubt that's going to happen, but they're going to try. I would say the powers that be, the shorts, the banks, the commercials, the bullion banks, whatever you want to call them. It's more than one entity, but it's a group of pro-dollar, anti-gold people that will take this market to the limit that they can, and this will happen. The other thing is that you don't have 600,000 open interest in gold now without a lot more interest in the metal itself. I mean, that's because the reason it's so large is because there's more interest in it, which is a good thing, especially when, anyone that knows anything about money knows that fiat fails and gold preserves. So these people that are even on the short side know, there's a lot of people on the short side of the gold market that have a pretty big stack of it. They're just playing the paper paradigm because that's how they make their living, and they get a big kind of sick joy out of scalping the public out of their money, because the public is notoriously long in the metals, and most people don't belong in the futures market. But unfortunately, it's what determines the price of not only the precious metals but all our foodstuffs. And I mean, it's really, really distorted. And I don't want to go down that road because I'll get ranting away. But I'll leave it at that. I'll give it back to you.
Okay. Thank you for that, David. Moving on to a little bit of a broader picture here. How do you see the current fundamental picture for the U.S. economy in general, for the financial markets in the United States in general? What are some things in the economy or in the markets other than gold and silver that you're looking at right now, David?
Yeah, I do a weekly perspective. So, anyone that's interested in my thinking, my work, should probably get on our free list. Just go to themorganreport.com and stick an email in the box. And then you'll be on the mailing list, because even though I've got a YouTube channel and a Facebook presence and a Twitter feed and a LinkedIn presence and all that stuff, I don't do a lot of social media. I have a staff that does it, although I do post my own Twitter feeds almost always. The point is that email will get you the weekly perspective. And for weeks now, I've been showing mainstream news, sometimes not the most mainstream. Often it's from Reuters or Bloomberg or CNBC or Market Watch or something like that. Of course, Zero Hedge plays in there usually almost every update. It's about 15 minutes of hardcore absolutes that determine, where the global / economy is. So right now, Martin Armstrong and I don't see eye to eye on everything, but he is one smart guy, and he is a good big picture thinker. I certainly would say that. And, he's right. I mean, everything worldwide is pretty much looking pretty bad, and yet the U.S., relatively speaking, is strong. But it's relative to what? Relative to a very contracting, distorted global economic system that's failing before our eyes. So the U.S. is crumbling, but not as fast. So the true picture of the economic system globally is deteriorating and contracting. The U.S. is doing the same, but that's not what you hear from the mainstream press. You hear these job numbers. Well, it's the way they calculate them. And there has been some benefit. And I want to be fair and balanced. I hate the Fox News. But the truth of the matter is you're seeing layoffs left, right, and center, and a contraction and consolidation. The other big one is the foodstuff situation. We have such a flooding out of the Mississippi Valley in the United States. In addition to that, the army beetle in China and other devastating situations throughout the globe with food production, that we're going to see in the second half of this year a higher price food across the board. And this is one thing that Americans will pay attention to. The inflation thing, and I use others' names. I mean, I think Jim Rickards is, one guy that I definitely admire. I read his stuff. I listen to a lot of his interviews. But the one area that I would have to disagree with Jim on, it's always bad to say anything about anyone, especially publicly, if they aren't there to defend themselves. But he talks about the inflation rate, and this is the official inflation rate. So I won't argue with that. That's a fact. The government puts out that number. But I think it's disingenuous on my part if I say, well, that's really true, because it's not. The true inflation rate, if you use shadowstats.com, will give you a much higher number. And beyond that, and of course Jim would admit this because I know he's a good guy and a great thinker, is like they take out food and energy out of the CPI. Now, what's more ridiculous than that? I mean, can you think of anything more asinine or absurd than the two things humans need the most, food and energy, and it doesn't play into inflation? And there's a reason for that. But if they had food and inflation in the CPI, believe me, the Fed would have their 2% right now. So these games that they play are typical of, what Bastiat said in the book, The Law. I mean, they keep twisting, turning, and torturing the law to make things to their benefit. Who's that? The 1%, the elites that can form the jurisdictions and the statutes to benefit them and them alone. That the reality cannot be ignored. And the truth of the matter is we're going to have to far higher food prices. Oil is a little tough one, and I won't even speak on it right now, but I will say that tougher times are coming, and they really are coming sooner than most people think. And yet, if you look at the mainstream financial press, everything's great again.
Yes, exactly, right. When you talk about it can happen sooner than people think, I don't understand that a lot of people. I don't think that a lot of people understand that. For example, I think back to 2014 when the price of oil, I think in June, was still over $100 a barrel, and then it basically collapsed and free fall through the second half of 2014, as well as the dollar taking off and strengthening in the second half of 2014. So moves can happen within the course of 6 months. So I'd like to kind of stay on that for 1 minute, if we could, in relation to the dollar, because there's a lot of talk right now. Is the United States going to come out and make an overt attempt to weaken the dollar? Are we in another round of an escalating currency war? And then so that's one question. And then a follow-up question would be, what do you think about the latest talkings with Judy Shelton being nominated possibly to the Fed, who is purportedly a gold standard advocate on the one hand, but on the one hand, just yesterday came out calling for a 50 basis point rate cut at the next Fed meeting, which is next week. So kind of a two-part question there. How are you looking at the Fed right now, and what is your outlook for the US dollar? And I'll let you take that in any direction you'd like to take that, David.
Okay. Well, on my weekly perspective, I believe it was one I did last weekend. I talked about the IMF saying that the dollar's overvalued. Yes, we're back in the currency wars. Yes, everyone's racing to the bottom. Yes, everyone wants their currency weaker vis-a-vis the next country's currency so that they get an export advantage and they can keep selling stuff and keep their economy from, collapsing. And I know it's a strong word, but that's the general idea. So the America's right in there with everybody else. And I think the IMF, I forget the number, I just did the video, but it was, I think, 14% or something. It was a range, like 10 to 14% overvalued. So there will be pressure to devalue the dollar officially. So there's that. So then on the gold side, it's very interesting, knowing, being a bit, well, first of all, being an adherent to the Austrian school to a degree. I think Rickards makes some pretty good arguments about inflation and money supply, and I don't have time to go into that, but he's a great thinker. I really like him. But you look at the Alan Greenspan thing and Ayn Rand, and, I've read not everything she's written, but quite a bit. Classics of Atlas Shrugged and The Fountainhead and her great thing, And here's, huge adherent to her, Alan Greenspan. He's, become Fed chairman. I'm talking about years and years and years ago. But you think, oh, man, this guy wrote probably the best treatise on gold ever written by anybody. And now he's Fed chairman. Are you kidding? And, all that gets put in this little compartment and put on a shelf and forgotten about the whole time he was Fed chairman. I mean, he did tell the truth occasionally when he talked about, we'll never default because we can meet any obligation of any size and any amount because we print the money. But what we can guarantee is what is the value of that money. And, the mandate for the Fed is to maintain purchasing power, basically. It's to maintain a monetary presence that's, worthwhile. And they haven't, in a little more than 100 years, it's worth about 2 cents from where it started. If you just go from the time we went off the gold standard, I think we're down like 80 something percent. So, that's easily, what is that, 30, 70, 30, 40, 50 years, more than 80%. So the Fed has not done its job, and it has not done its mandate. And very few people hold it up in front of their face and say, look, you guys are full of it, and now it's 2% inflation. So Judy, I think she may be an adherent to, what I consider an honest money paradigm. I mean, I think gold coin standard is out of the question, although that's the fairest out there. I don't think we'll ever see that. We could see a tie to gold. I think eventually you probably will see some kind of reemergence of a global monetary system, not a U.S. monetary system, but a global monetary system that does have gold in the equation in some way, shape, or form, but it won't be in a manner that is self-correcting like a gold coin standard would be. However, I think she is going to do what Alan Greenspan did, and this is my opinion. You asked me my opinion, here it is. She'll take that, everything she knows about money, the history of money, why you need to have stability in the monetary system, why we don't have stability in the monetary system, why it basically is the Fed's fault. And she'll put all that stuff in that compartment. She'll take that little box, she'll stick it on a shelf, and she'll be a real player. Now, she might verbalize things occasionally, like I just outlined Greenspan does, that causes, some of the gold bugs or people that are more savvy to how the system really works, perk up their ears and say, oh, wow, she sounds like she's really, on our side or whatever. And philosophically, she could be, probably is. But as far as making a true difference, I really, really doubt it. We're going to see this thing get to the end. And what is the end? And the end is where the default happens. And the default happens either by saying, you know what, we can't pay you back. You're going to have to take, 20 cents on the dollar. Excuse me. And you take the bond market down. That's an example. Or you default by default. What does that mean, David? I'm trying to be funny, but it's not a bit funny. And you default by default because people say, I don't trust this thing anymore. This green piece of paper with Washington's picture on it, or Jefferson's, or Hamilton's, or Jackson's picture, or Franklin's, I don't trust it anymore. And once that psychology hits, you cannot get it back. And that's what usually happens in a fiat system, is people distrust the currency. So if the currency fails, all bets are off. Now, anyone at the Fed or anyone in the mainstream or any major brokerage house or Jamie Dimon or any of these people are going to sit there and say, well, that will never happen. Well, it's happened every single time in all of recorded history. Why isn't it going to happen this time? What they don't really want to verbalize is that they may know that eventually it will happen, but they're just trusting it won't happen in their lifetime or it's so far away. The problem is, as you said, Paul, there are times when all of a sudden the oil market goes from $100 all the way back down to 30 in a matter of 6 months. And, the dollar could go from whatever it is now, I haven't looked in a while, 97 or 5, whatever it is, down to, 58 or 72, and then stalls out and goes down to 58 in a matter of months. I'm not saying that will happen, but it could happen. So that's the deal. It's trust in the dollar. I mean, anyone that knows anything about anything knows that you cannot, will not, and never will get your bonds back in real terms. And the only reason there's so much money in the bond market is, one, it's so liquid, and two, that everybody's betting that the interest rates will go lower, so bond prices go higher, so they make money in the bond market. Whoop-de-doo. If you make $1 million, 10 million, 10 billion, 500 billion in the bond market, and that fiat isn't worth anything, what good has it done you? And that day is approaching. That's why when you see somebody as smart as Ray Dalio say, there's a paradigm shift, think about that word, look it up and memorize it, and he's in the gold. There's a reason for that. Most of these guys that are of his caliber, probably would enjoy talking to somebody like me, excuse the ego, or at least let's reverse that. I certainly enjoy talking to him, but they know a lot that goes on that that someone, small fry like me could speak out verbally across the world in these, in the gold, silver investment, circuit for, conferences where they have a much more reserved posture because they have to. And I appreciate that. I'm not trying to put anybody on the spot. I'm glad that I am a small fry because it allows me to have a lot less, no one controls me. I can just be a loose cannon. So there we have it. We have a point now where, to wrap up, what we said earlier is that things could happen a lot faster than most people think. By the end of this year, 6 more months out, we could see gold test that level, whatever it does, bounce back up. We could see $1,450, $1,500 gold by the end of the year. This is gold silver ratios down to, let's say, 80 or something along those lines, or 83, who knows. And still, at the end of the year, people still aren't convinced that, gold's really back in a bull market. But even though, we've got the Ray Dalios and others saying it is so, they don't believe it yet. And that's okay. This is how, as you said, the wall of worry is climbed, and then you get to, 1650 or whatever. And it's like, well, gold was at 1900. I really haven't missed that much. And, I was going to buy some at 1400, but, I want to watch the market for a while. And these are people, and a lot of people, that will watch a market just slowly move away from them and then accelerate. And once it starts to accelerate and you get that parabolic move or double pellet parabolic, then people will say, oh, God, I'm in. It's just like the Bitcoin phenomena. People care less. I would say care less. They watch the market move away from them when it hit 2,000, 3,000, 4,000. But once it hit 6,000, hey, honey, let's get a second mortgage on the house and buy that Bitcoin. And by the time they got through Coinbase and bought it, was 7,500. Then it went all the way up to 19,000. And they were the smartest people in the world because they tripled their money only to hold too long and watch it come back down to 3,000. And now what do? You got a second mortgage on your house with Bitcoin in your wallet, and you're down to 1/3 of what you had a few months before. And this is how these markets can move. Gold's no exception. I think gold is very undervalued here, and it needs to be priced correctly. And again, going back to Jim Rickards, probably gonna have a call from Jim, but I think he's got it right. If we do go back and put gold back into either the U.S. monetary system or a global monetary system, the price has to be right, or the value of it has to be right. You can't put a price on gold that's too low and get it, let's say, out of the closet and into the monetary system. It's got to be priced where it's basically at that bull bear that we talked about earlier, where just as many people think it's of value to spend it as think that it's not. So there's an equilibrium there.
The bull market in gold and silver is indeed on, and if you are interested in navigating your way through it, I would suggest that you go over to themorganreport.com, look at all of the free stuff that David offers, including webinars, if I understand correctly. Yep. And then once you get a solid understanding of themorganreport.com, subscribe to themorganreport.com, because like David said, when it's time to sell, it's time to sell. When it's time to buy, it's time to buy. And he's a seasoned veteran to help you through those times. David, I'd like to thank you again for joining us today on Silver Doctors.
My pleasure. Thank you.
I directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
Sure you did.